fresh tariff headlines to gold's unexpected market leadership in a tech-driven cycle, and to the resurgence of international equities and macro signals suggesting a potential soft landing. These are some of the many forces currently shaping global markets today. I'm Michael Drozd, Chief Investment Officer for LaSalle Street. In this episode of A View from the Street, we'll explore the key drivers behind recent market movements as we head into the fourth quarter and discuss what may lie ahead. U.S. equity market performance remains concentrated in the Magnificent Seven, echoing the Nifty 50 era. These firms benefit from scale, network effects, and access to capital, creating structural moats that are difficult to penetrate. And unlike the dot-com boom, today's AI cycle is capital intensive. These companies are generating strong free cash flow and reinvesting aggressively. While this concentration has supported index-level returns, it introduces single-factor risk. And as stewards of capital, we recognize that markets simply do not move up and to the right. Prudent risk management and diversification across sectors, geographies, and asset classes and investment styles add to portfolio diversification in an increasingly concentrated market landscape. International equities are up over 30% year to date, outperforming U.S. markets. While a weaker dollar, down roughly 9-10% to date, has helped, the real story is improving fundamentals. Global companies have become more shareholder friendly, with payout ratios now matching the US at roughly 75%. And yet valuations remain compelling. European equities trade at 16 times earnings versus 25 times in the US, with similar growth trajectories. This presents a strong case for mean reversion and capital rotation away from the US. From a risk management perspective, increasing global diversification helps mitigate US concentration risk and currency exposures. It's worth noting that since the launch of ChatGPT in late 2022, gold has quietly outperformed the NASDAQ. That's a powerful signal. Gold is increasingly behaving like the anti-bond, historically benefiting when real rates decline. While that relationship has evolved, recent outperformance suggests that gold may now be anticipating future financial conditions, including the potential for financial repression and monetary debasement. During the COVID era, we saw over $5 trillion of fiscal stimulus injected into the economy. And with another $5 trillion potentially on the horizon through the passing of the One Big Beautiful Bill, that level of excess liquidity is now seeking refuge in hard assets like gold as a natural destination. Central banks continue to accumulate gold, and rising geopolitical uncertainty is reinforcing its role as a strategic hedge. Year to date, gold is up over 50%. The labor market is normalizing. Job openings have returned to pre-pandemic levels, wage growth is keeping pace with inflation, and consumers remain resilient, many insulated from rate hikes due to low mortgage lock-ins during the COVID era. And although the Fed has embarked on a more accommodative stance, it's important to remember that the Fed brought rates to over 5% without the economy tipping into recession. Earnings revisions are accelerating, AI-driven CapEx is robust, and bond yields still remain stable around the 4% range. So far, the data continues to support a normalizing labor market and soft landing. However, with the federal government currently shut down, we may continue to see additional weakness in the jobs numbers. While headlines around asset bubbles, tariffs, government shutdowns all can be unsettling, and while it's still difficult to pinpoint exactly where we are in the artificial intelligence supercycle, it's essential to stay focused on your long-term investment perspective. Keep in mind, the only true free lunch on Wall Street still remains diversification. And adding exposure to gold and international equities may enhance portfolio diversification, particularly in an environment shaped by fiscal dominance, shifting currency dynamics, and evolving global fundamentals. Thank you for tuning in to this episode of A View from the Street. For more information, please feel free to reference our recent publication or reach out directly. Thanks again.